Welcome back, Alpha Hunters. Hope you guys are doing well this week. The markets are closed for the week of February the 10th of 2023. So let's check out what went on this week in the markets. And it was a pretty volatile week, even though we actually didn't go anywhere week over week. You know, we didn't break last week's high or last week's low. But I'm going to start off by saying I did move market neutral. I'm sure you did see that on the thumbnail of the video. And the big reason why I did that on Monday. And I sent out this tweet on Monday basically saying, hey, I'm more going to work on providing, YouTube shorts updates, during the week if I have any idea changes or changing anything I was kind of thinking about. A little bit of why I did change that had to do with there was some articles that came out last weekend still saying that there was a significant amount of bearishness still in the marketplace. It was like a ratio of 1.6 to 1 still bearish on the market. So just kind of taking that into account, I think I saw that article on Sunday. And so, just kind of taking that into account, it's like, okay, if we didn't break below, get back below the lows that we put in over the previous highs, and we'll take a look at that here in just a couple of minutes. But if we didn't get back below these monthly highs over the previous couple of months, it was one of those things that, yeah, it might have just been a breakout, So we just needed to take it as is. But I will be working on trying to provide some updates through the YouTube shorts here. I'll work on setting some of that up. I just couldn't get that working as I wanted to on Sunday, Monday, and Tuesday. So I just need to spend some more time getting that going. Okay, so here you go for the week. We had a nice gap down. This is what I was kind of talking about last week in last week's video. I wanted to see a gap down, a very solid gap down, get back below the September and December highs. I basically mentioned that, hey, I wouldn't be shocked if we did do this, but we did try to trade lower initially. Here's the problem. Okay, in the first 45 minutes or so, we came right down, basically the first hour, came right down and hit right on top of this 408.15 level, which was the previous Friday high from January 27th. So all we did was come down, we hit that, and we bounced. Now, I didn't make my change right at that point. I waited about 10 minutes. I wanted to see if we would bounce, kind of have a little bit of a consolidation, then roll over. But about 10 minutes later, you can see that we were starting to move back in the other direction. And the fact that we just came right down to that price and bounced and tried to bounce there, I just said, yeah, you know what? It's a good time to just say this might have been a retest because last week was a breakout. Technically it was, right? When we broke out of previous highs. And it's just a good time to just be market neutral right now and let the market kind of figure out what it wants to do. And then I was kind of glad I did make that choice, that call, mostly because we were pretty volatile, but we didn't go anywhere, right? We just didn't go anywhere. And you can kind of see this throughout the rest of the week. Monday was a pretty sideways and kind of a choppy day. Tuesday, as we came in on Tuesday, the big story of the day coming into it was Jerome Powell had a speech around the middle part of the day, and that's why you see it get pretty volatile here around the lunchtime, where you get this huge spike. We go up, we breach the upper ends of some of these trend lines. We didn't take out the highs of last week, right? But we did get kind of close. We got right into the bottom end of this little double top, little neckline spot, and then rejected down. Came back down, took out the weekly lows up to that point. So came back down to the 408 level and then bounced and rallied through the day back to the daily highs. And it was just crazy. It was just nuts. Some of the price action going on there for the last couple hours of the day. Yeah, it was an interesting day. And basically all he said was, the same thing he said at the FOMC minutes meeting, or not the minutes meeting, but the meeting from the previous week. So not much new was said there. And this came after the non-farm payrolls on Friday. A lot of people thought he might change his opinion or his tone or his dialogue about some things with how hot that non-farm payrolls was. But no, he didn't. He just said kind of the same thing. And then, market comes out Wednesday, sells down, kind of just hangs out right in these levels of the September, December highs. And then we have a very solid gap up. And Thursday was the day. Okay, super solid gap up. We took out Wednesday's high of the previous day immediately. Like we did it immediately. We took it out by like 4 pennies on the SPY. and then proceeded to just trade down for pretty much the entire day. We took out pretty much all the levels of support, got back below all the highs right here. The high from January 27th, the December, September highs, and all that kind of stuff. And then the market finally closed. Couldn't get it here soon enough, right? And then Friday, a little gap down, mostly just choppy for the most of the day on Friday. Just choppy, little bit of a trade higher, kind of end of the day in the positive territory, but not a great deal of strength. So I'm going to talk briefly, kind of this daily picture that we've kind of got here, and some of the things I was kind of noticing. A lot of people calling for this little reversal pattern, and not to say that it wasn't a reversal pattern, because I talked about it last Thursday, Friday, that I was expecting, okay, we could probably see some bearishness come out of this. But this Thursday, 2 Thursday ago, this little like doji, kind of a fuller body to the upside, but it's still a pretty good doji. Got a little bit of an upper wick, a little bit of a lower wick, and then the Friday gap down, massive upper wick. And I was expecting, if the market's going to sell off, I have three conditions, right? And you can have these kind of conditions. Really, it's at pivot points. It's at pivot points, reversal patterns, that kind of stuff. Reversal patterns, and this is a pretty good reversal pattern. Not gonna lie, these 2 days here back to back are pretty good reversal patterns that we saw for Thursday, February 2nd and February 3rd. Those three conditions are: the first one, the reversal pattern needs to be obvious. The second one needs to work immediately, and the third one, it needs to be strong. Okay, now I'm going to show you one here in a second that looks very similar to this, and it meets all three of those conditions. But in this one, I would say it does not. It meets one of those. It's pretty obvious. This is a very obvious reversal signal, but it just wasn't immediate and it wasn't strong. And we'll look at one that's very similar to this, but the way this week played out, it just did not meet the immediate and it did not meet the strong part of it. So I do think we will actually break those last Thursday, the February 2nd highs. I think we will break those highs, probably come back down a little bit more, retest, and continue higher. And we'll go into a little bit more of a game plan later in the video, but I want to draw your attention back over here to August. This is a very similar kind of pattern. We got a doji up here, a little bit of a higher wick and a lower wick, and then a gap down with a huge upper wick, very much like it was on Friday, February 3rd. And then a little bit of an inside day. We didn't get, this past Monday, we gapped down. This one kind of traded sideways, inside day action. And then we got 2 following days of huge strength to the bearish direction. This is what I mean by immediate and strong. Immediate and strong. So this meets like the 3 conditions I usually like to see in reversals. I want to see it. One, this is obvious. This is a pretty obvious reversal signal. It's immediately works, maybe not the next day, but the second day after you see these signals, you get a gap down, trade lower, very immediate rejection. And then obviously the strength comes in. You see volume. Volume is actually trading higher, right? So we're seeing volume on these 2 breakdown days, trading a little bit higher. And that's another thing that you don't really see over here. You see volume is actually lower on these 2 red days. You're not really seeing a whole lot of massive bearishness. At the end of last Friday, 3 days later, we were only down 0.4%. We were looking at this on the live stream. We were only down 0.4%. But if you look over here in August, from the end of that day with that huge upper wick, down 3 days later, you're down 3% or a little bit over 3%. So you definitely tell the difference between these two. And to be pretty honest, it's starting to set up even more just like a bull flag. It's just setting up a little bit more like a bull flag to me. This is something that I'm not really thinking this is going to be the top. I think we'll see a little bit more of a top here later on in February or maybe even the beginning of March. Just kind of interesting to see how some of this plays out time-wise. So early in the week on Monday, this article came out about Janet Yellen making a comment that you don't have a recession when U.S. unemployment is at 53-year lows. So this is interesting, and really basically some of the numbers that we're kind of talking about here is, non-farm payrolls went up by 517,000 jobs. That was the report that came out last week. But the unemployment rate dropped to 53.5-year low of 3.4%. So what's really interesting about that is if we do go back and look at what the market did in that time frame. Now I'm going to look at the SPX here. My SPY chart's a little bit messy, and you got like 3 different colors here. Don't worry about these different colors. I'm just kind of overlaying some things here. But this orange line that you have on the left side here that comes down, this is the unemployment rate. It's pretty low. It's right now it's at 3.4%, and this is a monthly chart. So I'm going to zoom out here, and I'm going to go all the way back to, let's see, simple math. 2023 minus 53, so I guess it's like 1970 right here, this time period. Easily walk you through that math real quick, but this is about the same time period or last time we had unemployment this low. So I'm going to zoom in to this time period so we can see how the market did. Okay, so I went ahead and zoomed in on that 69 to 70 kind of time period when we had that really low unemployment rate around 3.4%. And that was roughly 53.5 years ago. Now, taking into account that we do have unemployment rate as low as we did at that time period, but there's a couple different ways you can kind of look at this, okay? 53.5 years ago, that was roughly this time period. You kind of notice the market is a little top heavy here, and a little top heavy, and that's when we go into a pretty sharp sell-offs really over the next probably about a year. You go from May 69 here to the bottom a year later of May 1970. So, roughly 12 months of just kind of bearish action. But notice, like, you get in there and it kind of like sideways moves there for several months. So yeah, I mean, it might take a while to kind of see the entire bear market play out from our standpoint where we are now. But there's other ways to kind of look at this. We are just now getting to 3.4% unemployment. So if it's like this situation, maybe we do see a couple months of bullishness, okay, before maybe we top out in the market and then start even more of a roller. Now, I'm not saying we're going to go back to all-time highs. Definitely not saying that. We've been on a pretty good run here even over the past couple of months. But, we could see some bullishness maybe continue over the next couple of months and then maybe some sell downs later on. But looking at this and just how long it might take for this to kind of play out, yeah, I mean, it's kind of interesting to see. One, just because you're not in a recession now doesn't mean you're not knocking on the door of one, or you're swinging from the rope right above the recession pit. So I still think it's one that, we need to be kind of cautious of possibly, farther downside. But I'm not saying it's happening next week, guys. It's not happening next week. And this is something that you kind of need to factor into when you have expectations of what you are looking for from the marketplace. Okay, so another thing I've seen a lot of people talking about here recently is the VIX broken? And mostly this has a lot to do with 0 day to expiration. Options have broken the VIX and all this kind of stuff. And I'm just going to say that that's not true. It has a lot to do with understanding how the VIX is calculated. If you read this very simple, easy to understand paragraph, and I'll read it right now, you can get a better understanding of what the VIX is and what it calculates. So VIX values are calculated using the CBOE traded standard SPX options, which expire on the 3rd Friday of each month, and the weekly SPX options, which expire on all other Fridays. Only SPX options are considered whose expiry period lies within more than 23 days and less than 37 days. So everybody is saying 0 day to expiration options have broken the VIX are not understanding how the VIX is actually calculated. The VIX does not take into account basically 3 weeks out and less options, does not factor into it. And a big reason why is because that is where so much activity is traded that it creates so much more volatility that if it was to incorporate that, the VIX would just be a little bit more volatile. So yeah, 0 day to expiration options, or really even 21 days and less, you don't want to factor those in. Even all those Fridays, you don't want to factor those in. only 23 to 37 days, the ones that expire on Fridays, and the monthlies. Those are the only ones that you want to factor in understanding how the VIX is calculated. So another thing that I want people to kind of be aware of is really how much, calls and puts are kind of out there. And this is a source you can use. It's called MaximumPain.com or maximum-pain.com. And one of the things I'm looking at here is the SPY ticker symbol. And basically you have different maturities that you can look at here, expirations. And one of the things that you can kind of get from this is how many, option contracts are kind of out there in circulation. And this kind of helps you judge which way a lot of people are leaning kind of on the marketplace. Now, what I went ahead and did is I just went to a bunch of different expirations and took the call open interest amount and put open interest amount, which are these numbers right here. I know it's a little offsetting, but I took all those numbers and dumped them into an Excel spreadsheet. And I didn't take all the numbers. Actually, I just took all the Fridays going out for as far as I can go. I did not take the dailies. So like the ones that expire Monday, Tuesday, Wednesday, and Thursday. I did not worry about those. They're going to have less volume anyways. But one of the things I did is I kind of just took all those numbers and put them in here. And one of the things that it was very interesting to see, and what a lot of people have kind of pointed out before, is how many options are kind of out there on some of these major expirations, right? So March, you're going to have, this is a major expiration. March is this March 17 here. And then you can also see how elevated some of these put call ratios here on the first part of the year. And we're definitely here on the first quarter. So we're definitely seeing a lot more puts out there. And I highlighted all the ones that are over 2.0. Okay. So all the ones that are under this put call ratio column, these are all the ones that are over 2.0. All the puts and calls, for instance, these are all the ones highlighted that are over 1 million number of units outstanding. So there is a lot out there. There's still a lot out there. And you notice here, once you get past June, that no more highlighted. Okay. So no more highlighted past June 16th, right? June 16th. Obviously you got June 30th here. Not a major one. It's the half year marker that they do put out there. I don't know why they do that one, but most people do focus here on the June 16th. But if you look down at this chart, it's a little bit easier to tell. One of the things I'm going to kind of talk about here on the game plan I'm going to talk about here just a little bit later is notice how much after you get past June, which is really this part right here. Once you get past June, how much less option activity is into the future. There's even a really good spike here in June for over 1 million units on the puts side, but there's just so much more activity on both option side, the calls and the puts, in the first half of this year. And so it's starting to be one of those things where I don't know if the market's really going to drop as much as people are expecting in the first half of this year. Even like I was expecting. I was expecting the first half of this year, really sometime around March, April, would probably be bottoming somewhere around the 3,200 level on the S&P 500. But with how many puts are out here, it might not happen. It might not happen until we get to the back half of this year and maybe even the beginning part of 2024. So we'll see kind of how it shapes out. But there's just a lot of people out there still expecting a lot of bearishness. And once you really get past this one here in March, maybe we do start to see some of that bearishness kind of creep in, right? Because this is a major one here in March of over 3 million units of puts. So yeah, we're about to hit some major levels of expiring puts. And we do have one coming up this next Friday, a little bit over 3 million. This is not something I'm going to track all the time, especially when we're in bull markets. It just doesn't make sense. But this is probably one of the big reasons why a lot of people are not getting that bearish sell-off, just because so many people have hedged for it. When if everybody's expecting it, then there's not much for the market to do other than go in the opposite direction, right? If everybody's already sold or everybody's planned for Armageddon, then Armageddon's not going to happen. It's just one of those things that a lot of people are layered into protection or directional put positions or bearish positions here in the first half of the year. But once we get past Q1, we'll see what happens. And then, even past the first half of the year, man, you just see how much really drops off. And it really isn't until you get to like December 15th. These are the annuals that get put out there 2 years before. So we'll see if some of these start to get some more activity going out in the future. I'll probably keep this going for now. I'm not going to show this off every week unless some major changes happen. Right now, it just seems like there's just too much out there. And you can also notice how much the ratio, the put call ratio, really drops off here later on in the year compared to how it is in the first part of the year, up above these 2 point levels. Yeah, I mean, it's going to drop off later on. So we'll see what happens later on in the year. I would just expect a lot of choppiness. And this is another reason why I have moved to market neutral. Okay, so here's the kind of the rotation that happened throughout the week. And there was some pretty good rotation actually going on during the week. One of the things that you can kind of see here is energies absolutely crushed it. Had a lot to do with Friday. There was a report that came out that Russia was looking to cut oil production and sent a lot of those energy stocks screaming higher on Friday. But you can tell even on Thursday, they were pretty much the top leader for the day or for the week already going into that Friday session. And then, you see, on a little bit more the underperforming side, XLC, XLY, some of those risk on type plays. The other one, XLK, pretty much coming in a little bit more in the outperforming area. It was doing pretty good in the middle part of the week and then kind of came back to the middle of the pack. So maybe a little bit more of that rotation there for the XLK and technology for the second half of the week. But yeah, XLY, discretionary, not performing as well on the week. XLC, though, this is where Meta and Alphabet, Google kind of live. And if you've been following the Chat GPT kind of stuff, you know that Google kind of had a little hiccup. I'll get into that here in just a second. And then obviously Meta last week had a major gap up with earnings, and then they just started, coming back down, trying to fill in that gap from earnings. So the XLC might continue to struggle here for a little while. Anyways, I just wanted to show off the kind of the sector performance throughout the week. So VIX moved higher throughout the week, but nice little rejection wick there coming in on Friday. I would expect the VIX to actually gap up on Monday, so watch out for that. It usually does on major news event weeks, or at least that's been the trend over the past previous few months. We had CPI back here on this week, and obviously the VIX gapped up pretty good. So I would expect the VIX to kind of gap up a little bit on Monday, but I don't know if you can take a lot out of it. Then I would expect the probably VIX just to trade lower throughout the week as we get past CPI. Unless the market is absolutely getting trashed. So last week we talked about the dollar moving really strong after the FOMC meeting from last Wednesday, and nice move higher, nice little consolidation here over the middle part of this week. Looks like it wants to continue higher. Turn on the moving averages, nice, potentially getting pushed higher by these moving averages. So we'll see if that continues going into next week. I think it probably will. It looks very much like it wants to just continue higher. So yeah, dollar strength obviously not going to be the best for the stocks either. That's looking pretty bullish there on the dollar and the DXY. 10-year rates looking pretty good, looking pretty bullish. Very much looks like the dollar just breaking out higher even still on Friday. So yeah, looks like they're going to continue going in the bullish direction. The 10 and 2-year inversion yield, nice little move higher late Friday, getting a little bit off of this lower level. One of the things I'm going to look for here early this next week is a spike down on CPI day, Tuesday morning, CPI day. Spike down, take these lows, and then start moving back up. I would imagine that's probably going to be the low is Tuesday. We get that spike down, take that low, and then we start moving back up, and we'll see if that plays out. But I'm kind of thinking it happens. GLD finally looks like it's going to continue to pull back. So if you're looking for some entry points, I still think you're going to be just fine waiting to get some entry points later on here over the next couple months. But yeah, still looking a little bit more weak, especially with this huge gap down that it put in over the course of last Thursday and Friday. So yeah, still going to be a little bit weaker going forward. Might have some short-term strength, but I'd imagine with the dollar looking as strong as it does, GLD probably still gets hit. Last week, talking about this huge island reversal here coming in on the HYG, the high yield corporate bonds ETF. This is like a rejection that worked, that was obvious, it worked immediate, and it was very strong. It had a nice little obvious rejection here, a reversal type pattern, and it worked. It worked immediately. We came down, and then it was pretty strong. We're seeing some pretty good volume coming in on some of these reversal days or selling days. So the HYG in the bond market, this is another thing though, is this looks a whole lot weaker than the stock market does. You know, the stock market doesn't look as weak as this does. So HYG has been front running some of these tops throughout 2022. You know, we topped out over here on August 11th on the HYG. If you look at the SPY, August 16th was the top on the SPY. So the HYG still front running possibly. We'll see how this plays out here over the next couple of weeks. With how much it's broken down, might see a little retrace higher. If it retraces higher and the SPY pushes higher, maybe that's going to be the cause to kind of break down the S&P 500. We'll see how that plays out over the next few weeks. But yeah, something to be cautious of as far as U.S. equities. LQD, the investment grade corporate bonds, same kind of pattern kind of coming in. Nice little reversal. This was even more bearish the middle part of this week. And, you know, it just kept trading down. So, you know, the LQD, HYG trading pretty close in line with each other. But yeah, this one just a little bit more bearish to start out the week than the HYG. Now, this is the IEV. This is something else that I've been kind of keeping my eye on really ever since October. A lot of the stock markets around the world have put in lows in October. European markets have been on a tear. The Chinese market also been on a tear. I'm gonna look at that one here in just a second. But they're starting to maybe flatline here and not look as strong. And this has been while the US market has continued to kind of make highs late last week. We haven't really seen that same follow through in Europe. So just saying, if Europe starts to be a little weaker, maybe they front run, because they've been on the stronger side of this run up on equity prices around the world. You know, they've been up, you know, roughly 36%. The SPY from the bottom has been up roughly 20%. So you could say the US equities need to play catch up, or they have not performed to the bullish side as some of the other global stocks. And if the global stocks start to sell, what does US equities wind up doing? Do they sell down more than Europe? And then what about China? Chinese stocks, MCHI, yeah, they've been selling down pretty good. They topped out actually in late January, and we've seen them just kind of continue to trade lower. Obviously, ending this week a little bit on the bearish side, so we'll have to keep an eye on kind of some of this price action. Maybe they're just resting. They're going to come back, consolidate, and push higher. You know, these two markets, the China market and the European markets, have been leading really over the past couple months. And now that they're not really doing that, we'll see how a lot of that maybe impacts some of the US markets as well. Looking here at Alphabet or, you know, Google, one of the things that kind of went on this week with Google, I want to bring this up because this could be a fantastic opportunity. It really can be. I got a lot of headlines up here, a lot of different news articles and stuff like that. But you know, Microsoft, you know, is partnering with, you know, with its Bing chatbot with ChatGPT. And if you're not following, you know, everything that's going on there, well, it's like just this new craze that's kind of going on in the technology space. Basically, it's just a chat bot that you can talk with, and it comes back to you with really good dialogue, and not just like short blurbs that you get possibly on traditional search browsers or just websites where you then got to go look up the information. It brings you back answers in a chat type sequence, like in a paragraph form. So it's been really interesting. It's been a lot of people have already been finding it very useful, but there's a lot of articles here. Just kind of want to run through these real quick. Google stock keeps falling after Bard ad shows inaccurate answer. So that was another one. So the Bard here, this is what Google is calling their ChatGPT own system. So it'll be interesting to see if Google can kind of rewrite the ship here. But basically what happened was a lot of people were enamored with this ChatGPT system, and Google said, okay, we're going to turn ours on. and basically it gave an inaccurate answer. And this is what led to a massive selling in Alphabet stock on Wednesday. And this is why it dropped, 7.5% on that day. And then even the following day, it dropped a little bit over 4%. So very interesting time, as this could be a great opportunity to be in this space, or just paying attention to kind of what's going on here with AI, positioning for it and that kind of stuff. But this, an analyst says there's a clear Usain Bolt style leader in week's AI battle, and and it's only been going on for like 2-3 weeks. But basically, I'll give you the highlight. It's Microsoft. Okay, Microsoft is basically they're saying there's a clear winner, and it's Microsoft right now, because they have a great partnership with OpenAI, who owns ChatGPT. So you're going to see some changes coming to Bing here in the future. And Bing has already gotten over 1 million people on its waiting list for this new AI chat box type service they're going to be bringing out. And yeah, it's just really interesting. And I'm going to get back to Google here in just a second, but really interesting time to kind of see some of this kind of going on. And even Google's own employees wind up criticizing the CEO, for, the rushed botch announcement of the ChatGPT competitor Bard. So there's just a lot of news and headlines around this space, and you can kind of see that a lot of people are just really keeping their eyes on what's kind of going on here with this space. And a big reason why, and why I think there's a huge opportunity here, is not to say that Alphabet is a great opportunity to go bearish, but I think there can be some great opportunities to possibly be bearish or have some bearish plays here on Alphabet. A big reason why Alphabet has, like everybody knows, they have like 90% or roughly 90% of the search of, everybody just goes to Google and uses that for search. So if there is something new coming along to dethrone you, even if they don't take you off the hill, even if they shrink that market cap from 90% to like 50% or 55% or 60%, that's going to be a huge loss in Alphabet's revenue. They are the kings in that space. So the fact that a lot of people are saying that Microsoft now has kind of a head start here, or looking to potentially be the early leader, that this is huge. This is a big deal here. So I'm not saying right now is a great opportunity to be bearish. Obviously, we had some pretty big selling days that came in this week on Alphabet, but I would definitely keep an eye on Google stock here. If you want to keep an eye on Microsoft, might be a great opportunity as well. Obviously, they did a lot better, week over week compared to Alphabet and Google did, but there's definitely going to be some opportunities, in these areas to trade it either way. You can trade it bullishly, maybe Microsoft, or maybe even buy Google on the dip. Google's getting hit. Are they going to give up so easily? No. I'm sure they have great technology. They might be just as good. So it's just interesting to kind of see what's some of this is going on. But when you are the clear dominant winner in a market space, and somebody comes out and kind of dethrones you, or it is perceived as you are starting to get dethroned, that is a great opportunity to potentially go against them. Just go against them. So not advocating for anything right now, but we definitely saw some people get that sense, obviously, this week with some of the bearish action that we saw on Google this week. All right, taking a look here at the Qs. Obviously they've been on a pretty strong run, having a nice little pullback here. We saw them some of the technology areas being a little bit weaker in the second half of the week. What's really interesting here is we're gonna have some pretty good support levels coming through here that we had at the top end of December, and we might be hitting those early this next week. Now Monday, I'm not expecting much in the market, but what I would expect though is Tuesday morning for us to gap down, probably off the CPI news, and then I would expect buyers to come back in. I would expect buyers to come in and maybe even gap down to this level here that we kind of topped out, somewhere around the 294 to 295 type area. And if we do that, and when you start to see buying come in, I would just hop on. I think there's going to be a lot of people trying to buy this dip as we broke out some previous highs and we didn't immediately eject, right? Going back to those three criteria I looked for. Yeah, we didn't immediately reject. It was a very choppy week. It just kind of says like it's a little bit more of a flag pattern, just slow retest, gonna pull back, consolidate, and push back higher. So Tuesday morning might be the lows of this week. And if we drop off hard on Monday, maybe that's the lows. But if we get back down to these levels, I would like the opportunity on being bullish on the Qs and kind of the way that feeds over to the SPY as well. So obviously you can see here on the SPY, the SP 500. Yeah, nice little pullback here to some of these previous highs that we had back in December. Obviously, we didn't hold these highs, but we got some other highs here throughout like late November that we can definitely pull into. And if we do that, and it's also around that 400 level, that if we do that, people, I would imagine, probably try to buy the dip and push it back higher. So this is kind of the plan I'm expecting. I would expect, probably not much to kind of go on Monday, but Tuesday, if we gap down from CPI, I would expect people to try to buy it up, try to make a run. I don't know if we get this high. I would expect we do try to make a run to 420 at least, maybe up into this level. Big reason why I think that level at least is, you basically fill this gap down that we had all the way back in August, when we actually had this reversal pattern kind of play out. This is kind of like a little bit more of an open gap that never really filled here around that 421 or so area. So maybe if we just get to 421 and we just kind of fill this gap, maybe that would be it. But that's kind of what I'm looking for anyways on the market here. I don't expect a whole lot of bearishness. I really don't. I'm going to be looking for some of those opportunities here over the next coming months. But I think it's just going to be more choppy than anything. I think it's going to be a slow process. Guys, I showed off how many puts are still out there, at least in the first half of this year. And even if we get past March, then a lot of puts actually exit the system. And this is kind of one reason why I kind of have it kind of play out like this. Maybe we set up a head and shoulders pattern to kind of play out here over the next like 2 months or so. And then we start to see some selling come in. And then we get past June. Maybe we start to see a lot more of the bearishness come in. And, I'm not trying to say, hey, you know what, hop on bearish. And if we don't take out this high, and push back up to 420, if we get back below this low that we put in on January 19th, which is around 387, or even this low that we put in around 375, if we take out either one of those, I would be much more bearish at that point in time if we don't get back up and take out these highs. If we get back up and take out these highs, make a run up to 420, I'm going to be looking a little bit more for the bearish play up here. But unless we do that, it's just look for the short-term moves. Keep your risk very manageable. The opportunities will come. Do not get succumbed to short-term options right now. Right now is not the time to be doing short-term options. The market's very whipsawy right now. It doesn't know what it wants to do. It's got misleading information all over the place. Some days the information's good, some days the information's bad. There's a lot of bearishness still out there. And there's starting to be more bullishness, though. There's starting to be more bullishness. That is something that we need to keep an eye on. If we do get much more exuberant, then we might really set up some bearishness. But yeah, it's just don't expect this to be like we're gonna be done in 2 weeks. It takes a while. Anything you've seen about previous bear markets, they take a while. Not counting COVID. That not the same thing. This is kind of the game plan of what I'm expecting kind of going forward. If we do get the drop on Tuesday, a little gap down, I would just look to buy it up and, just look for just shorter term moves for now. There's not really much reason to be bearish on the market as we broke out last week. We kind of just very much chopped through this zone. We didn't just reverse. Okay, we didn't just reverse. We'll see what happens, but Alpha Hunters, y'all have a great weekend and take care.